Hello everyone, I'm Jamie Holmes, wishing you a happy new year from Weiss Research. We're kicking off 2011 with some of our investors' best ideas for protecting your money and growing your wealth during what is sure to be a turbulent 12 months. Nilus Mattive offers advice for income investors looking to turn a profit in any market environment. Brodrick is still finding value in one of last year's best performing industries, natural resources. And Rudy Martin gives you his favorite plays among emerging market stocks. Plus, Jen Amos joins us with more picks and pans for the new year. And we'll bring in experts from around the globe to discuss whether the bull market in commodities will keep charging through 2011 or whether it's run its course. All that and a closing comment from Martin Weiss coming up right now.
From our studios in Jupiter, Florida, Weiss Money Network presents Money and Markets. And now, Jamie Holmes.
Hello, everyone. As we start the new year here at Money and Markets, we're focusing on a type of investment that is likely to offer solid returns regardless of the direction of the overall equity market. Nilus Mattive covers dividend-paying stocks in his Income Superstars portfolio for Weiss Research, and he joins us on Skype from his home in Chaddsford, Pennsylvania. Hello, Nilus.
Hi, Jamie. How's it going?
All right. First of all, are you still recommending dividend stocks to income investors over other asset classes like bonds?
Yeah, I think going into 2011, bonds, there are some signs of the bond market cracking. So I would continue to avoid most categories of bonds. And I think relative to bonds, dividend stocks in general are paying better yields. And, in addition, have a lot of upside potential going into the next year as well. So, I think there's more upside and less downside as well as better yields.
Nilus, which sectors of the market would you focus on when looking for dividend-paying stocks?
Well, I continue to favor consumer staples right now. The companies that, make products people continue to buy no matter what happens next. So foods and beverages, tobacco, household products. And that's mainly because, even if you listen to guys like Ben Bernanke and other people in Washington, even they admit that the U.S. economy is sort of teetering on the brink right now. And, if we fall back into a recession or even into just slow growth going forward, I'd rather play it defensively, So I think consumer staples are still the place to be.
Okay, so give me some specific names here. Which specific consumer staple companies can you recommend?
Sure. One of the companies I've mentioned to you guys in the past on this show and that I've also been recommending to my subscribers is Altria, the tobacco company formerly known as Philip Morris. I think the stock is a little pricey right now because it's had a great run. But it's an example of the type of firms that I think people should look for. Again, they make a product that everybody buys no matter what happens next. And I think that it's a good example. If I had to name another company, I'd talk about Procter & Gamble, which is a company that's in my dad's income portfolio right now. Make household products, things like toothpaste, which I think people will continue to pay premium prices for those brand name products, are not likely to trade back down for a 10-cent difference in terms of the generic price. Also, if I look at Procter & Gamble, I see they have a huge foreign sales market. So as emerging markets consumers continue to buy better, trade up to American lifestyles, I think there's substantial growth ahead in overseas markets. And lastly, I'd note that companies like Procter & Gamble, their share prices have not risen as much as most other U.S. shares. So I think there's still a pretty good values to be had in that general area.
Now, let's talk a little bit about some other sectors of the stock market. Where else would you be looking for investment ideas, and which industries would you just stay away from?
Well, healthcare stocks are a good example. I'm recommending some of the major drug makers, for example, Pfizer. Again, based on the fact that they're somewhat defensive. I think everybody is aware of the generic competition that a lot of these big drug makers face, and I think that's priced into the shares. So, I think there's a lot of upside potential going into 2011 with the drug makers as well. If I had to talk about an area that I would avoid, I would say the major financials, the big banks, I would continue to avoid going into 2011. Not only do I think they face major fundamental problems in their businesses, but I'd also note that even if they start to raise dividends again, they're still way, way off the levels that they were paying a couple of years ago. And so you're just not going to get the yields to reward you for taking the risk.
All right, Nilus, thank you.
Thanks for having me, Jamie.
One group of stocks that has been on a tear over the past 6 months or so is the natural resources sector, which has been tracking the bull market in commodities. Brodrick is a small caps and natural resources expert for Weiss Research and the editor of the Crisis Profit Hunter newsletter. Sean, as always, it's good to see you.
Good to see you, Jamie.
Sean, what investment advice for the new year would you offer our viewers?
Well, everyone knows by now that gold has been on a historic bull run, but they may not know as much about the rally in other precious metals. So I would tell investors to look into the iShares Silver Trust, ticker symbol SLV. because that holds physical silver and it's more than doubled in price since February. Palladium is a precious metal that most people don't even know about. I mean, it's extremely rare, but it's also used for industrial purposes. So I think people should probably check out the ETF's Physical Palladium Shares Fund, ticker symbol PALL. Now, PALL has gone from around $40 a share to around $75 a share in just 10 months.
Sean, any individual names out there among metals producers that you would recommend?
Well, Great Panther looks really good to me. It's a Canadian silver producer that operates mines in Mexico. It's one that I've been to visit a couple of times down in Mexico. I really like their operations there. Now, in Mexico, it has some mines that is in an area where they've been mining for about 600 years, and it's just silver rich. This stock trades on the pink sheets in the U.S. under the symbol GPRLF, and it's run up a lot lately, from around 67 cents a share in August to around $2.50 a share now. But I think it has the potential to more than double again, to more than $5 a share. I also like another silver miner in Mexico that actually trades on the New York Stock Exchange, Endeavor Silver. That has a ticker symbol of EXK. Now, Endeavor has also had a great run over the past few months, and its management keeps making all the right moves and keeps buying up undervalued properties that they just put right into work for them, so everything's working out. Now, they had some, struggle for a while. They couldn't really convince investors that they had what it takes, but they put together a nice operation down there. Profit margins are rising. I think they're going to have a great 2011. So I think precious metal prices could actually pull back in the short term. That wouldn't surprise me. But if they do, I think that investors should buy shares of Silver Wheaton, symbol SLW, which is my favorite silver producer. That one doesn't own any particular mines, but it buys silver streams from other companies, puts those together, gets them at a really cheap price, and that's really one of the best leverage plays to silver on the market.
Sean, give me some stock market plays tied to other types of commodities.
Well, especially among commodity producers, I'm more comfortable recommending ETFs, that is, baskets of stocks, because they're more diversified than individual stocks, meaning that there's much less of a chance they'll blow up on you. Consider asking the iShares Dow Jones U.S. Oil and Gas Explorers Index to your holiday gift list. That's ticker symbol IEO. Now, the IEO has seen a big jump over the past few months, but it could go even higher if oil prices continue to rise.
Let's talk about one segment of the natural resources market. It still doesn't get as much attention from investors. I'm talking about agricultural commodities. What is your take?
Well, 2010 was a great year for agriculture. I think 2011 has the potential to be an even better year for agriculture. I just put subscribers to my Red Hot Global Resources Service into the DBA, which is the PowerShares DB Agriculture Fund. It holds everything from cocoa to coffee to wheat to soybeans, a whole basket of all kinds of agricultural goods. And we are seeing booming demand from the emerging markets, especially from China. They have an expanding middle class, they're expanding in more ways than one, who are upgrading their diets. They're turning China from a country that used to export grains into one that not only imports them, but imports a lot of grains. And their grain imports have jumped fivefold in just a matter of months. Now, Americans, we tend to ignore agricultural commodities because we have plenty of food here, but that's not the case around the world. And I think agriculture, grains of all kinds, that's going to be a major story in the markets in 2011. All
right, Sean, stick around. We're going to be bringing you back a little bit later in the show to discuss your investment ideas with Larry Edelson and Olivier Garay of KC Research.
That'll be great.
Sean mentioned emerging markets, and many experts think they're going to continue to be the big story among investors in 2011 and beyond. One expert who has been finding profits in those countries for years is Rudy Martin, emerging market specialist for Weiss Research. Rudy, it's always a pleasure to have you here on the set. Thank you, sir.
Thank you.
Rudy, why do you think the emerging markets offer better opportunities for investors than stocks in developed economies?
Well, let's start with the facts. It's a fact that an incredible amount of real wealth is being created, not by just the top industrialists, but also the middle class. And in Latin America, more than 30 million people have moved out of the slums in the past decade in Brazil, and they're buying everything from mobile phones to cars to homes, and that's pushing the demand for not just the infrastructure, but also materials to finance the build all that new construction in Latin America and as well in Asia as well. Fortunately, as you know, the emerging markets are also the source of the raw materials. Brazil is a huge exporter of oil and gas, and Argentina exports a lot of agricultural commodities such as soybeans. So the best way to look at this is now we're in the second wave. Similar to commodities were the spark that lit the fire, and the fuel is really the ongoing domestic and regional demand.
Okay, Rudy, so how should investors play these trends?
Well, you know, I mentioned that there are a lot of great plays in Latin America on the export, and I've been focusing a lot on the commodities boom, especially companies like Petrobras, which is the Brazilian oil company, and Cretsu, which is a Argentine agricultural company. But today I want to focus on consumer stocks in Latin America, and I'd like to recommend the ultimate emerging market consumer stock. That one is an easy one to understand, Ambev. It's a Brazilian stock that produces beer, soft drinks, and other beverages. It's the sole distributor of Pepsi products in Brazil, so it has a dominant position in a growing market. Now, granted, that stock's up 40% over the last year, but I still think it's undervalued based on the quality of its earnings.
Let's talk a little bit about a sector that everyone seems to be staying away from, at least in the U.S., and that's financial stocks. You actually like some banks in the emerging markets. Why is that?
Well, it's true. I mean, it's real. The world's banking system, for the most part, is a disaster. Fortunately, the economies of Asia and Latin America are seeing growth there, and the bankers and investors are rolling in the dough there in the financial sector. So as a result of that, you have a situation where the financial institutions in the world, and especially in the emerging markets, are undervalued. I especially like if you're looking at emerging markets, the Banco Santander Chile. It trades on the New York Stock Exchange under the symbol SAN. It's 76% owned by Banco Santander out of Spain, but it operates in the Latin American country with the highest debt ratings. Chile is a net creditor with $14 billion in sovereign funds. It's a solid company with real dominant position in its market, 20% market share based on loans, 30% based on industry profits, high returns, consistent sustainable growth, excess solid capital. It's got all the right things you want in a financial institution.
Rudy, give our viewers one more investment idea for 2011 in these emerging markets.
Well, I love my telephone, and I also love the telecommunications sector. Demand for communication keeps growing in emerging markets, and telecom stocks in general represent great values with above average yields. Dominant player in the industry that I think is not well recognized is Telefonica, ticker symbol TEF on the New York Stock Exchange. It's actually a Spanish company, but about 55% of its business comes from Latin America and Europe and other regions. So thanks to smart acquisitions in the region, it's a growing company. Telefonica has over $12 billion in free cash flow, meaning it can buy up other companies like it recently did in Brazil, and pay dividends and buy back shares. It's now using, as a matter of fact, that money to make a big investment in the Chinese market, meaning Telefonica will be a major player in the global industry for years to come. I love my Telefonica.
Okay, Rudy Martin, thank you for those investment ideas.
Thank you, Jeremy.
Coming up next, we'll get more investment picks from all of the Weiss Research editors, as well as some stocks that you should avoid this year. Jen Amos will be here with those recommendations, and later we'll focus on commodities, the asset class that saw the biggest gains in 2010. Three experts will tell us whether commodities will continue that run in 2011, and they'll discuss their favorite ways to play those markets. If you have any questions or comments, just email us at weissmoneynetwork@weissinc.com. We may not be able to respond to all of your emails, but we're keeping everything on hand for future episodes, and as always, we appreciate the feedback. Money and Markets will be back in just a moment.